Hello guys, glad to have you on board again. Today, Tuesday, means we're talking about beginner's level of experience today. So we're going to stick to what you guys need to work hard on mastering and dealing with the range trades the most effectively. So yesterday when I was talking with the French guys in the live room, and yes, once again, I'm sorry, but there is a much bigger French community in here in Discord, though when I have available time for you to spread some knowledge, I generally tend to do it for French users in priority. So I'm really sorry about that. I hope you do understand the reasons why. It's not that you guys are left behind, anything close to that. It's just that when I've got like half an hour available to make a live room, I generally will favor helping the most people. So as there are much more French users, and I can, at least not for now, duplicate myself, I have to make that hard choice, and generally means I favor somehow the French guys. So hopefully in the future we'll have more of a balance between the French community and the international ones, and you guys will no longer be like I said, I don't want to say left behind. It feels more like less favorable condition, just because less users. But anyway, what I just discovered is I was talking about the range trade, and I was pretty much surprised to see how much what users were giving me wrong answers. And it actually reminded me of a really common bias that noobs do have, and one of those I had back in those days as well. Right, so that's something I know, that's something I figured out, so I'll help you figuring this one out as well. Still oscillating around the same old biases that every beginner in trading does have, always the same two biggest mistakes, and all the derivatives that they will induce in your behaviors, being the lack of patience and the fear for uncertainty, leading to desperately searching for a little bit of control. So in here, that's the second one that is at play, because when I was asking the users to answer a simple question, where do you think are the range trade? I told them, in here there is a range trade for you, a trade that you should be able to highlight clearly and simply. Where do you think that is? And the problem is, most of the users were giving me answers I never thought they would give me. They basically told me, like, in here or in here. Some users even said in here. What the hell? This is not even a range trade. Eventually this one could be, but certainly not for you guys. Remember that any fucking how, you trade at least 76% fib, and you trade below context. So in here you couldn't have taken that trade. No matter how hard you would have tried, you couldn't have got that. Alright? Not possible. Eventually this one could have been managed some way, but the problem is, as you made new lows in here, alright, you need to restart the count every time you fuck up a range boundary, which means new low in here, you restart the count, which means in here you're not in wave 3, you're in wave fucking 2. Wave 1, alright, first boundary, so you'll learn the second boundary in here, the one you can't trade. Remember that you trade starting at the third boundary, and you can't go any further than that. You don't trade fourth boundary. You trade only this one. You wait for the range to build its boundaries, and you try to catch a retracement. So many users were talking to me about those things, which are actually swings, all right? And they forgot about the essential trade in here, which is this one. It's the only range trade that's in here. But the problem is, it's just not your fault. What you do is what most traders do. They filter out prices when they try to read the market, because naturally your eyes don't take care of this area. They don't give a shit about this area. They don't give a shit about all this. They don't give a shit about this neither, because you see the prices have gone below. So as you naturally erase prices that doesn't make sense, this is where you make the biggest mistake when you're learning trading. Because you have a natural bias to have a look at swings, stuff that you should nearly have a look at. Remember that any fucking way, we somehow use previous movements to forecast and low risk to forecast a low risk area in which you're going to try to get to trade it, and that's simple as that. You're just looking for market conditions, favorable market conditions. But the problem is, most of you guys will try to make sense of what happened in the past, which means you naturally flush out signals or areas, price areas that were meeting the rules you're looking forward for. But when you try to somehow look at how things happened in the past, you naturally have a look at this area, this one, this one, this one, this one. As the problem is, this is definitely not how you should read prices. How you read prices is, first of all, you start from real time, all right? And as you scroll back in time, because that's the exercise I was asking the guys to do. The problem is, I figured out this problem, and it instantly reminded me of the way I was looking at the market years ago. You look at swings because you think that the market, that reading the market is understanding how swings behave, how swing triggers. Like, that's where the mistake is happening. You're definitely trying to understand how the market behaves, though you naturally flush out all the areas in which the market visibly has done nothing. But remember that you're replaying the past. But still, signals have shown up in between. And if you don't learn how to flush out uninteresting signals, and this is where you get into the most dangerous way of trading, because you have a look at how the market reacts in the area where it actually has been reacting, and you avoid looking at the intermediate conditions that have been triggering, because you eventually could have said, all right, I'm trading in here. Why the hell would you have been trading there? You can't do that, all right? But some people and some strategies, this is where the biggest mistake is with traders. You learn a strategy and you think it's easy because you're definitely looking at areas in which the market reverses. And you're going to say, oh, god damn it, that indicator is great. It's putting an exit right on the bottom. Oh man, that's the indicator I need to fucking understand the market. You got it all wrong. First of all, understand what you do and learn to do some stuff, but don't do this. Don't try to look at the market where it's swinged in the past to give it a sense and try to search reason why the market reversed here and then here, because if you do look at the market this way, you're under the natural bias of looking for control. You're trying to understand why the market reverses in here, as you shouldn't nearly give a shit about that. You're not looking at fucking reversal when you're a beginner. All you take care of is hesitation. Remember that the first thing you're going to profit from as you are a beginner is definitely not how the market reversed, but how the fuck the market hesitated. You profit from hesitation more than anything else as you learn trading. The range trade doesn't profit from anything else than that. So please have the defined mindset. You damn don't look at reversals. I know your eyes can't do any different than that. So use the abilities that will trick your mind's natural behaviors. Delete the fucking prices. If you can't stand looking at the market swings, then delete the fucking prices. You still have access to the reliable information in here. This is what I suggest you do. If you do this, you get into the color in the style tab in here by double clicking on the indicator. You turn the arrows to 100% opacity. And the thing is that now you'll see those blue and red arrows much more clearly. Though you don't see the fucking prices, though you don't try to figure out the swing trades, but you still know where the market has gone. And you still have access to the most reliable information. You know that any fucking way you don't trade until this area where the prices are breaking above the resistant context, in here when prices are breaking below, or here, all right? This is what you look forward for. All the other prices doesn't nearly matter. And then you seek for conditions, the specific conditions you look forward for in order to trade. Right? So in here, as you can see, the trend channel hasn't nearly been following the prices because there are algorithms to filter out very volatile issues, especially for cryptos when market makers are chasing for stop losses and stuff like that. But as you can see, it's been highlighting the euro dollar as a too fast price movement as well when the catalyst came up the other day. So anyway, you still see that the price has gone there, all right? Though anyway, you've got your swings. You've made a new low in here, all right, which means you need to start your range. Range is when prices go from one context to another. Though in here you had a potential range trade, it might have triggered a trade in here, but you shouldn't have taken this because you can't wait. You can't trade unless you trade below context. So in here it hasn't been going far enough for you to trigger the trade. Though you restart the wave count, 1, 2, context to context, though you wait for any time the market breaks the fucking support context. All right? So we go here. Oh, what happens there? Target, below context, everything you fucking need. This is where you get in. This is where you take your range trade. And this is the kind of trade you should be able to highlight. All the rest in here is useless to you. This is the kind of trade you want to take if you're a beginner. And you really need to work hard to highlight those trades because this is where you get your profit. If you can't figure out the low risk range trades, then you really need to work this one out. So focus your attention. Stop looking and searching for reversals. This is for way more experienced traders than you currently are. So try to focus first things. You look for hesitation. What hesitation is clearly the market building a low or market top, retracing to the opposite context, and you're going to try catching the pullback. That's simple as that. All right? That pullback must be above or below the support and resistance context and must trigger a risk management. This target is more than enough as a risk management. That certainly doesn't mean it's 100% sure that you will stay there, but normally range breakouts out of the context is definitely the kind of reversal areas you look forward for. All right? So you need to be aware of that. All right? Stop looking at the swings, look at the areas. Though you would have said, damn it, the guy is an asshole or what? Because he told me I should buy this area. All right? Yeah, there's definitely a range trade, and you should, when this candle closes, even if it closes crazy fucking bearish, you need to take that trade. So if you're really beginner, you should wait for a triangle confirmation, and in here I just got into the indicator to update that algorithm because it just passes real close to triggering in here, just an inch away from triggering. So I just updated the indicator. So the next version, which is going to be version 2.3, yeah, version 2.3, I'm probably going to release this one later today or tomorrow. And this one has a blue arrow in here. All right? It's just a tweaking on the algorithms. I'm optimizing the values and variables to make it reliable. So in here anyway, range trade. So let's see how it goes. Though the context doesn't update, remember this is a trading view mistake. When you're replaying on 1 hour time frame, for some fucking reasons, trading view doesn't allow us to gather daily data, so the context doesn't update according to our plan. But anyway, let's figure it out anyway. Oh, fine. Remember, reaching out to resisting context is validation, which means in here, depending on your fucking risk profile or whatever, you're gonna start risk managing, which means multiple options like putting your stop loss at the lows, whatever, but you're risk limiting. You're reducing the risk you previously took. Like you took 1% risk, now you barely risk 0.5% or pretty much 0.25% in here. All right? So moving on, you never know what the hell is going to happen. All you know is that in here you care about reducing your risk. The next price you care about is reaching out 50% context and closing on top of here, because that's simply what's been written on this goddamn PDF manual. So you don't do any fucking thing until those things actually happen. All right? Move on. All right. Oh shit. Though it's pure and simply this, you've been stopped in here. That's it. End of the story. No worries, you got validated and invalidated afterwards. Like I told you, think about the market as this, all right? A set of decisions that the market can make. First, the market approaches the speculative area. then you've got two options. Either the market will trigger a condition or not. If not, no trade. If yes, you've got two pending options coming aside from this. All right. You take the trade. All right. In here, either the market will invalidate, take out your stop loss, or validate. After the market has validated, you got to set another set of two choices. Either the market invalidates one more time, or the market gets confirmation. And after confirmation, either the market will take down your stop loss or reach out to your taking profit. That's the usual stuff. That's how things go. That's how you need to see range trades. It's a simple process, real simple. All right? In here, no signal, no trade, no loss, obviously. In here, it's invalidation. All right? Though you took the trade, you get in, and instantly the market invalidates you. It will happen sooner. It will happen sometimes. That's part of the game. All right? All right. Though it's validation. Confirmation. And trade. All right, let's figure it out that way. All right. Let's call that the approach. All right, we're approaching. You enter. You validate. You confirm. Limit, which means you'd finish your scenario. You get to reach out the maximum limit or profit taking or whatever, but actually this is where you gather the most money. All right, entry and get straight to invalidation, you probably take the maximum loss, which means what you generally risked out there, a 1% loss. All right, you're rarely going to risk more than 1% on range trades, especially if you're a beginner. If you get to validation and then invalidation, you're generally going to risk 0.25%. So very low risk, right? In here, confirmation, there can be no losses. It's 0% loss, and normally you should have a gain. All right, so let's call it that way. Generally, it's going to be this, like you get plus a 0.25%. In here, it's minus. You lose that money. All right, you get to understand that. All right, let's just figuring out that way. You're really going to understand why those trades are low profitable, but they are still having positive outcome in the end. So, and if you reach out the limits, you're generally going to take plus 1.5%. All right, that's approximate values. All right, so now let's figure out, the more you play this thing, all right, even if you end up, those things are pretty rare, just as rare as those ones. All right, like those ones, invalidation straight after entry or reaching out the limits are pretty much the same percentage of chances, the same odds, though as long as this one is higher than this one, you're profitable, right? That's fine. And this too gets pretty much balanced as well, which means as long as you get validated, the risk is pretty limited. If you can reach out confirmation, you have a guaranteed gain. All right? So, is this thing profitable or not? Yes. What is the statistical outcome? It's not necessarily that big, but still profitable, which means the more you play this game, the more you win. That's as simple as it is. You need to trade the more 100 times to figure this one out, at least, to really figure this out all by yourself, that the more you trade with this, the more profitable you'll, the outcome can't be negative. If you follow the rules, try to bend the rules and it won't work. But the thing in here is that you don't nearly give a shit about what's going to happen at some point. As you've been trading this long enough, you figure out that it's just random stuff. All right, sorry about that. It's anyway, you don't know where this thing will lead you this time. Probably till the limit, it's great, or maybe you'll end up with just a confirmation or whatever. But the thing is that generally, the more you play this game, the more you have odds to win. It feels obviously much better when you get the win rather than the loss, but you understand that the loss is part of the process anyway, and that you don't nearly give a shit about it. Because most of the time, you'll be in between validation and invalidation, and in between validation and confirmation. All right? Very few trades get invalidated, more trades gets profit taken, and obviously half of the trades will be stopped between validation and invalidation, and they will somehow balance each other. All right? Anyway, I want to share you something else. Now let's talk about another way of applying the strategy, just for you to shift the biases you have, because trying to face these natural biases straightforward generally isn't the best solution. You have to trick your mind. So the problem in here is that naturally you look and seek for reversals for stupid reasons. You want to understand the market or whatever, but you're naturally looking for reversals. Remember that you shouldn't be doing any such thing as you're beginning. You should get away from looking at reversals and just look at hesitation instead. Though the problem is you can't stand doing it naturally. You'll know the problem by now, but that doesn't mean you're going to flush it out instantly. It's going to take quite some time to vanish. Though here's a trick you can use to be more effective in the meantime, as you process this thing out of your natural behaviors. Though, if you can't stand looking at a reversal, so you see this market going down and you can't do anything else but forecasting wherever the fuck it's going to reverse, then you absolutely want to do this, all right, then that's still possible, but with a range trade instead of trying to catch the fucking bottom that you shouldn't nearly be doing. You really want to do it, all right, you want to risk take, then first of all, be aware that there are context alerts, so whenever you have this, you know that you need to zoom out more than anything else, but still, if you want to take some risk, do it, but range fucking trade. So just look out for range. As long as you trade a range without context, you can take the 1% risk. As long as you figure out the range you want to trade with a context alert, you goddamn make sure you divide the leverage by 2. Because this thing means higher risk, because you're trading lower and shorter time frames, though you're being more aggressive. Being more aggressive when you're a beginner doesn't mean you can't do it, simply means you're taking higher level of risks, though please lower your capital exposition to this trade. It's as simple as that. You're starting to risk manage by doing this. You're figuring out that this trade is riskier than a trade without that, though you're going to deal with them differently. One is going to be fully leveraged 1% risk taking, the other one would probably be 0.5% risk taking for that same for that single explanation. More risk, less risk taking. You balance those things and you're already starting to risk manage. You understand that each trade is different, all right? Though you don't have that much difference in here, if you figured out the risk to be out of a 0 to 10 scale, by doing this, you simply assess risk by 0 to 5 and 5 to 10. So you've got 2 levels of risk taking. That's definitely not that great. But you start understanding what I told you. It's never black and white. It's like shaded gray areas. And though you're going to start looking at risk this way, all right, very few shaded gray areas, and you slowly get more you slowly get better at understanding those risk levels. Like I said, first of all, you're going to see risk as 0 to 5 and 5 to 10, like low risk, high risk. Then you're going to see risk as damn it, what's that word? Oh man, integers. Oh, god damn it. You start have a look at each and every integer. So you're going to be assessing the risk as 0, 1, 2, 3, 4, 5, 6, 7, 9, 10, 7, 8, 9, 10. And then finally you get even better and you start having a float values. Like you'll figure out the differences between 6 and 7. You're going to be 6.5, 7, and things like that. You get more precise through time in assessing those risks, because you'll process more information, more context and stuff like that. Obviously it takes quite some time to really get there, but that's what the yellow guys do. All right, so talk to them, they'll confirm what I say, because this is the only way you'll see the market through time. There's no other options. So anyway, let's get to the actual information in here. If you want to trade a reversal in here, all right? That's fine. But you can't do it, all right? You can't trade a reversal in here. The market is grinding down, sticking to context. Trend channel is narrowed, which means there's probably a trending context in here, but on the lower time frame. Though, all right, you want a reversal, but you can't trade it, then look for a fucking range, all right? You want to take more risk, go 15 minutes. All right, context alert, so you know you're going to take a very low leverage in here. But remember that after trends, there are always going to be range. So, is there a trend? Yes, there seems to be one. How mature is that? That's the simple question you might wonder in here. So, let's delete the fucking prices to avoid any biases. And think trend. You take your little piece of paper. You don't need to understand much about trends. What you need to figure out in a trend is the fucking breakout. And then you'll figure out if you had the other options. So here, can we have a breakout? All right, both contexts are unfolding. We're crossing targets. So yes, there is very likely a breakout in here. So in order to confirm the trend, you need to make sure the market has been pushing toward divergence, made a pullback, and then final excess. So do we have a divergence in here? Very likely had one in there, right? We can see multiple swings in here and the momentum not following through. So here's probably your divergence. This is very likely your pullback though. So you're in a mature trend right now. You're probably making the final excesses. Though, is your trend mature? Yes. Is it very likely going to build a range? Yes, of course. Is it still doing it right now? Not at all. You can't. All right, let's put the prices back in the game. What now? Let's pose this and think for yourself for a bit. What could be the element, the rational element? Think about condition. All right. What could be the condition for you to figure out this thing as building a range? Think. The rules are simple. When you want a range, you want prices to go from one context to the other. So if this was our final excess, then we need prices to break up the resistant context. That's as simple as that. So the next thing you want to be doing in here, all right, if you want a range trade in here, which is going to be aggressive, remember, because of this context alert, you can't do it. The first thing you do is that you put yourself a mindset. Take a piece of paper and you say, all right, euro dollar, my scenario is going to be, I'm going very aggressive on 15 minutes because I want to be seeking for a 1 hour reversal, but as I can't trade that reversal, I at least will limit my risk by looking for a short-term range. Though I'm going to go lower time frame, 15 minutes, and the first thing I want is the euro dollar crossing up the framework resistant context. That's as simple as that. Resistant up, which means I want the prices to reach out above the resistant context, though this is where you'll get alerted. Currently, in the current context prices, it will be 1.0910, all right? But obviously, these things move as time goes on, all right? This is dynamic leveling. So this thing will follow. Whenever we manage to break up the resistant context, you'll be alerted. Are you going to be taking a trade? No fucking way. You don't trade the second range boundaries. Remember, this will be the first one, and you would just be at the second one. All it will tell you is that at this time, you'll be able to turn on the range alert. All right? I think I'm going to release the version 2.3 update almost probably today, and I'm going to include something new in there. I'm going to split the range alert into neutral range bullish entry and neutral range bearish entry. All right, because in here what you're looking forward for is the bullish entry, but you still can get eventually some other alerts that you don't nearly give a shit about. So I'm going to filter out so you really get less alerts but more alerts that you care about. All right, so it's simply that in here your strategy will be trading that range, trying to figure out the third range boundary, bullish entry. All right, so you'll put that alert on, and what this alert will do is simply waiting for the suitable conditions for the market for you to trade. They wait for 76% retracement. They'll wait for you to be trading below context. They'll wait for you all the necessary conditions. You will also be alerted anytime there is a breakout in this range or anything like that. So you'll simply be alerted on everything. So now let's try to forecast the future. Problem is we've got catalyst in here along the way, so it's probably going to be messy in here because 15-minute time frame is definitely going to be impacted by the numbers showing up later today. All right. But despite that, all right, let's put that aside and just use that as an example. You want to reverse this trade, 1 hour context, you can't do that. It's not possible. So wait for a 15-minute range to buy, and what you're naturally hoping for is something like that. The market going in there, pullbacking in here, and giving you eventually a bullish opportunity. Obviously in here we've got a problem because of those catalysts that can alter cycles and stuff like that. But let's assume there were no catalyst. This is exactly what you would do. You can't look out for a bullish entry in here because that's not possible for you. But you can still wait for the market to eventually reverse, and if it does, you'll try to catch a pullback. Does that mean you're definitely going to have a bullish trade in here? No, because you can go in here, get to validation, be invalidated. All right, you can get validation and get confirmed in here and then invalidated, or it can go there. Multiple options, but by going in here, the market can still go instantly down as well and take down your stop loss. All right. The thing is that you never know. All you know is that if you respect that set of rules, you're into something you manage, you're real range trading, you do apply a consistent strategy, and that's the only thing that makes a difference. That's the first thing you should focus on right now, not trying to understand market swings and stuff like that. Just understand how you master and apply the same fucking rules every time. And the only modulation you can make in order to have tradable context is that I accept you guys dealing with harder context, but when you have this alert on the fucking chart, first thing you do, you make sure you have been checking the higher time frames. And you also make sure that you trade with lower leverage. That's absolutely necessary. You'll take more risks, and risk you can hardly handle as you're still beginners, though limit the fucking leverage. It's simple as that. You're not here to make money. You're here to learn stuff, and most of the time you'll learn by making mistakes, though make sure those mistakes are not costing you your precious capital. Capital is what you'll need to survive out there, so please don't waste it. That's the most important way and the smartest way to learn trading. Save your fucking money more than anything else. Be greedy and you'll lose it all, all right? Just be smart, be rational, and that's how you survive long enough to learn trading. Anyway, that being said, let's take another example, because actually I'm talking about this for another topic. You know, I'm looking forward for a gold reversal, not necessarily right now, but I'm looking for a gold reversal sooner rather than later, and I'm looking for forward for prices in this area. So let's say 1 hour. All right, so now we've got unfolded context, so it's not the best case scenario in here, but we're looking at something to be eventually interesting for a reversal. What do we have in here? A target, so we've got more than anything we know in here for an interesting range context. But can you trade those reversals? No, you can't. In here you can see a range, all right? First boundary, second, third, fourth. Can you trade fourth range boundaries? Not at all. So can you trade that? No way. But you do have a set of information suggesting that a reversal could occur here. Those speculative traders like me are looking for those reversal signals, but you don't, right? You can't, all right? More than anything else, you've got both support and resistance context unfolding, all right? And catalyst on the dollar showing up later today. But still, if you want to trade this as a reversal, all right, then first of all, have a look at the higher time frame, and you should be having a quite a significant and easy answer out there. You go 4 hour, all right, no context alert, which means this is where you get your answer. Where the hell do you think we're going in here? We're trading that support, so either today the catalyst pushes up, and we're going to pull back probably to the 23% fib, or if the catalyst pushes down, we're probably going to go down to the 38% fib, where we have a moving average and probably some strong support, all right? So it's hard to say because a catalyst is going to set the choice for us today. Anyway, let's assume you want to take the risk of a 1 hour reversal in here. As I said, you can't do the reverse trade. So do the same old stuff. Go 15 minutes, all right? Try to find a mature trend. All right, breakout, crossing trend line, crossing targets, though very likely breakout in here, pullback would be in there, all right? So it will be pushing, pullbacking, final accessing, though in here you've got a structure for a possibly mature trend. That doesn't mean the trend nearly is mature yet, simply means the trend could be mature. So at least that's fine. You can try forecasting a possible range, but still, can you trade a reversal? Not a goddamn way you can do it. Though you do the same old shit, you put an alert on top of the resistance context. If we get there, you know the market might be ranging after this trend. So if you want to buy, the only low risk entry you could make is if you follow the rules, wait for a possible signal in here, and this is how you'll start eventually catching that reversal, but with things you're able to manage. The only thing in the meantime is that this context alert must be assessed in your risk management. As long as you trade with this, you know you're taking higher level of risk, you divide the goddamn leverage by 2. All right? Understand this, if you trade context you don't master, you'll take too much risk. If you want to be taking a little bit more risk to get higher numbers of trades, you can do it, but be sure that you lower the leverage on those more aggressive trades. But you still use the same old strategy box, the range trade. As you master this one, then you can, just as we do for green guys, start to figure out other contexts in which you're going to try trading the pullbacks and stuff like that, all right? But remember the thing, I've been putting those alerts in colors that stands out of the chart. If you forget about those context alerts, then there is a huge problem, because beginners, first of all, shouldn't be dealing with those contexts. But if you absolutely want to, then yes, I'm fine with that. I think you can do it, but make sure you lower the leverage. All right? These are the rules. So practice this, have a look at those stuff. Try to remember that you can't search for reversal. This is definitely not what you're looking forward for. All you look for in here is eventually taking a little bit more risk, going on a shorter time frame in which the context alert is lighted on, but don't do it too much. Don't do it all the time, all right? The best case scenario is when you're not dealing with context alerts and finding usual range trades, all right? This is the safest way for you to trade. This is what you look forward for. But if you absolutely want to find more opportunities in your markets, I'm okay with the context alert being lighted on, especially and uniquely on the range trades, all right? You don't do this with other trades, only with the range trades, and when you do, leverage divided by 2. That being said, I see you guys tomorrow. We're going to deal with automated trading strategies, what are the pros, the cons, who is this meant for, who can profit from this, who will lose a lot of money because of this. I'm going to go talking about this without detour. I'm going to go straight into the rabbit hole tomorrow. It's going to be no choice, so that's how it is. So you guys last week voted for this, and you had to face psychology because French users mostly voted for this. So this week I give you no choice. So we'll deal with what you guys picked last week. We talk about those trading robots and automated strategies. And like I said, the answer is complex, so we're probably going to take an hour long to talk about this. So see you guys tomorrow or on Thursday for the intermediate level ones. Bye guys.